Take a look at this. This is Zimbabwe's stock market. Notice how everything is flat, smooth, everything's good. Maybe a slight pick up there, and all of a sudden, boom, stock market skyrockets to 517,412. Now, that's the stock market, but what caused this? Take a look at the inflation rate. If you look at this chart here, upwards of 800%. And if you go to their interest rates, look what their interest rates went up to. 200%. Can you imagine buying a house on 200% interest rate? That's what happened to the Zimbabwe. Now, some people will say that'll never happen to the U.S. It's just never going to happen because those were not real interest rates. And now you may be saying, Pat, I mean, I know how you're doing this with the inflation rate and the interest rate, but that's not the real interest rate. Well, if you want to look at the real interest, here's what you'd be looking at. Even if you look at this, look what the real interest rate was in 2022. Minus 30%. What do you do with minus 30%? Do they pay you? Like if 10% I'm paying, are you paying me now when it's minus 30%? Imagine how much of a shit show it was in Zimbabwe. And by the way, if you want to calculate that in US, the real interest rate would be if inflation is 5% and interest rates are 3%.